I received an email last week from one of you, thank you so much, one of our YouTube subscribers, asking me if it was possible to buy a business with no money down. And it got me thinking. So the answer is yes. Yes, you can buy a business with no money down. Is it easy? No. But in today's video, I'm gonna go over 3 proven ways that you can buy a business with no money down. Let's get to it. Hey everybody, welcome to my channel. I am your host, Leo Landaverde, business and commercial loan broker, helping you buy and scale a profitable business. If you're thinking about purchasing a business someday, whether traditional or a franchise, or you own a business and want to learn how to scale and eventually exit your business, then you come to the right place. Go ahead and subscribe to my channel and don't forget to hit the bell and you'll be notified every time a new video comes out. Number 1, seller financing. This is a very good option for you as a buyer because A, it doesn't tie up your personal credit. Now, there are several reasons why you would want to do that. A, perhaps you don't have any money to put down and you want to buy this business. Now, another reason may be that your credit score is less than desirable. Maybe you have a 600 or less FICO score and you know that if you went to a traditional bank, you probably wouldn't get the financing. Or the other option may be that you actually do have working capital and you have plenty of cash in the bank, but you don't want to tie it into buying the business for the down payment or for any reason. You want to have it as an emergency fund or you want to use it for working capital. All of those reasons are valid. Now, on the seller side, there may be a couple of reasons why they want to offer seller financing. And the first reason is because maybe this business has been on sale for a long time. Maybe it's been listed on the different websites for 6 months or over, and there's no traction, there's no incentive. Nobody is interested in it, and it's just sitting there while the owner is trying to probably move on. So that's not really helping them. They want to get the business sold. Another reason may be that the business itself has problems that have yet to be uncovered. There's a reason why buyers are not coming forward, and then the seller wants to sweeten up the deal by offering financing and carrying it up themselves. Or another reason may be that the owner cannot find a buyer with a deposit. Now, if the owner found a buyer with a deposit, chances are if they have 10%, they could get an SBA loan and it probably have good credit. So a combination of those reasons makes a business suitable for seller financing. But in my experience, most sellers won't want to go for that. So you have to find the right seller at the right price in the right industry. Please comment below and let me know which of these strategies would work best for you. Also, let me know if you already have a business in mind you'd like to purchase. Feel free to reach out to me. I read and reply to every comment every day. Thank you. Strategy number 2, it's called the 401k business financing. I really like this strategy for a couple of reasons, but let me tell you what it is. The 401k business financing, also known as the rollovers for business startups, and the acronym is ROBS, R-O-B-S. It is a strategy, and keep in mind that this is not a loan. You're basically tapping into your own money that you've been saving, but with the fact that there is no withdrawal fee or a tax penalty. Normally, if you're under the age of 59, if you withdraw money from your 401k, you will have to pay a 10% penalty or a tax penalty to the IRS, and there will be some other fees associated with it. But if you're using it to fund a startup or to buy a business, that doesn't apply, which is a really, really cool thing. But it is not a loan. You're basically tapping into your own money. So here's the cool thing. There is no interest, there is no collateral, and there's no credit score. So neither of those plays a role. Your credit score, your past experience, or your experience or your collateral play no role in this type of eligibility. It's basically you're leveraging your money tax-free. If the content of this video is resonating with you, please hit the like button and comment below. YouTube loves interaction, particularly your comments, and I really appreciate them. I read the comments and I respond to them every day, and I also want to create a community, so that would really help me. Thank you so much. Option number 3 is called a leverage buyout, also known as LBO for short. This is a very common strategy among private equity groups. And the thing to leverage is you are able to put very little money down, but you actually get a loan on the assets of the business. Say this is a business that, say a manufacturing facility that has millions of dollars worth of equipment already there, and the equipment is free and clear, which means you have those assets that can be pledged. So you basically put very little to no money down, and then you get a loan against those assets, and you use that money to buy the business. Now, it only works if there is enough value in those assets for able to make it worth the while for the seller to sell you the business so they can get cashed out. So you end up with the assets with a loan. But here's what you have to keep in mind when you're doing a leverage buyout. The ideal candidate for a leverage buyout, the ideal seller, it's a company that has stable cash flow. It's gonna have very low outstanding debt, and it's gonna be undervalued. If any of those three components are missing, you won't be able to do a leverage buyout. And the most important of them all is cash flow. I constantly talk about two things in my videos. If you've been watching my videos for any length of time, one is cash flow and the other one is debt service coverage ratio. So I have plenty of videos about debt service coverage ratio in my channel. So here's what you need to understand. In a leverage buyout situation, you're buying the assets, which means you're leveraging those assets into a liability. So you're gonna have a loan, you're gonna have monthly payments. You better have very, very good and strong cash flow to be able to support that debt, probably to the tune of 1.25% debt service coverage ratio or more. But it is a very effective strategy, and you wanna do that for a company that is undervalued. So if you buy a company, say for $1 million, and you say you're able to put 0% down and you're able to get $1 million loan against the assets, the seller cashes out, now you're the owner, but you can take that company from $1 million to $5 million. You profit from the delta between what you bought it for and the new appraised value of the business, whatever that may be. So it's a very good option, but you have to really know what you're doing, which means you have to be really good or have somebody in your team who's very good at appraising the value and potentially the future value of that company at some later date. So let's do a quick recap. Okay, so here are the three options. Number one is seller financing. So the financing for this type of situation comes from the seller themselves. It doesn't touch you. You don't have to use your cash or your credit or any collateral. The seller finances it all. Option number two is you become your own bank. You basically tap into your 401k, your retirement account, and get a tax-free, no type of penalty. You draw some of your hard-earned money, you buy the business, you continue to build on your wealth, because eventually what you can do is you can actually take some of the profits of the business and put it back in your 401k plan. So, and the last option is basically, it doesn't involve the seller and it doesn't involve you, but it involves the assets of the company on a leveraged buyout option, in which you can actually pledge those free and clear assets of the business, get a loan so you can buy the business. Either of those three options would potentially give you no money down. Thank you very much for watching my video. For a limited time, I am giving away two of my biggest resources, my Advanced Growth Plan template, as well as my Financial Projections Workbook. These two documents together have helped hundreds of business owners predict and achieve financial success in their business. Go ahead and click on the link below. They are my gift to you.